I've checked your KiwiSaver balance recently. Chances are you liked what you saw. It's been a strong first half of the year for investors, despite some bumps along the way. But not every part of the market is telling the same story. Harry Smith from Fisher Funds joins us now. Morena, Harry. So start from the top. On the face of it, it's been a pretty good year for investors. Yeah.
The global markets through the end of June, I think, are up about 11%. But that sort of hides the dispersion we're seeing within the index. And some of the volatility. You know, if you go back to March, equities actually came 10% off their highs. And then we've seen a really good rally, April, May, June. If we've gone into July, we've sort of seen markets are flattish, but some of the shine has come off last year's winners, so that volatility has continued into July.
What do you mean? What shine? What winners?
Well, tech's really led the way for the first 6 months of the year, particularly memory.
Gangbusters, wasn't it?
Yeah. Particularly memory chips and gangbusters. What about like a company like Samsung, mobile phones, memory computer chips? That was up like 175% in the first 6 months of the year.
Crazy.
And I think that's given back around about 20% or 15%, 20% of its gain in July so far. So that's just some of the volatility we've been talking about. But, you know, a pullback like this, I think is pretty healthy, especially when the markets have run quite fast and hard, and also a bit of speculative behaviour coming into the market.
Yeah, how can you tell what's speculative behaviour?
Yeah. When I think about speculative behaviour, I sort of think what's more casino-like, what's more betting, as opposed to what's really investing. There's been a couple of things that have sort of just raised a little flag for me this year, both related to debt, but everyday investors have been taking on debt called margin loans to buy equities. This has grown 50% year on year in the United States. Then there's been the rise of these products called leveraged exchange traded funds, which essentially give you 2x or 3x the return of the underlying security. So if a stock goes up 10% and you own one of these leveraged ETFs, you get a 20% or a 30% gain. Yeah, but vice versa, if it goes down 10%, you lose 20% or 30% of your money.
Oh, wow.
Right? And so I mentioned like Samsung just before. Part of that is because Korea has been like the epicenter of this behavior of people borrowing money to buy equities and then investing in these leveraged products. It's sort of like debt on debt, if you know what I mean. And we've seen some pretty wild swings in Korea in July because of this dynamic. It's interesting about what actually brings out this behaviour in people, and I think it largely comes down to FOMO, or fear of missing out. You know, they see their friends, family making strong returns, and they stop thinking so much about the risks that you're taking on, and then so bring that back to like what investing is. Like investing to me is much more like the mainland cheese ad, you know, good things take time.
Longer term.
Yeah.
Yeah, that's so, and it's that gambling mentality as well, isn't it? But it's like high stakes wins, high stakes losses. So looking ahead at these market trends, where are things going, do you think? Yeah,
so it's very hard for me to say what's going to happen in the next sort of 6 months, because I consider that to be quite short-term thinking, not long-term thinking. But what I'd say is, you know, we're halfway through the year. We're starting to get updates from global companies, especially banks around the world. And what we're hearing from those banks is that, look, the consumer's doing well, the corporates are doing well, paints a pretty positive picture for the global economy. And then in an hour or so, we're about to hear from Google, so it'll be really interesting to see what they say around the amount of investment that they're putting into AI, and Facebook and Amazon come out next week as well. So I think those things combined will give some direction to the market as we go forward.
Oh wow! Do we expect that will the Nasdaq will rally ahead, or what is it?
Are you asking me if I've got a crystal ball?
Yes.
Yeah. Unfortunately, I don't, and I can't really tell you. Look, I think it is a major subject of the market around this AI dynamic, and I see you've actually got a story coming up around data center and some of the pushback to that. So it is, but it has been such a major trend for the market since ChatGPT came out in 2022. And it continues to be a major driver of the market, just given how well tech has done and how much is getting spent on this on the AI infrastructure thing.
So interesting to watch. Thank you very much, Harry Smith from Fisher Funds. Kia ora.
Thank you, Tova.
Yeah.